Hello and welcome, Eddie. Thank you so much for taking part to be the first guest on my podcast. Just for context, on this podcast, we shall be talking about personal finance and investing, and also to an extent, just bringing in guests to share their experiences in terms of their career trajectories. Please help me welcome my good friend here, Eddie Amatam, as our first guest. And just to provide context, I'm going to just, tell you a little bit about Eddie. Eddie is a tech professional originally from Uganda and now living the Canadian dream. Eddie has a great passion for personal finance and investing. And interestingly enough, he ended on the same scholarship that I got when I came to Canada. That is the Mastercard Foundation Scholarship. So basically, that's how Eddie and I met at the University of British Columbia in 2014. So Eddie has wide experience in different sectors, including insurance sector, also accounting, and also now recently he has been doing a lot of work in the technology space and data science. So please, Eddie, welcome to the podcast. I'm so excited to have you here.
Thanks very much, Isaac, for having me. And it's a privilege to be here, privilege to be your initial guest. So very happy to be here and share.
Thank you so much. So, to get things started, I just want to make sure that you are comfortable. Please tell us a little bit more about, your journey. You know, I know we met at the University of British Columbia in 2014, but for the interest of our guests, can you share your story a little bit more?
Yeah, I'm just a regular guy from Uganda. And back in 2014, after my high school, I was privileged enough to have secured the Mastercard Foundation Scholarship. And that's how I moved to British Columbia for school. So I got to come here for my undergraduate, and that's where I did get to meet you. Back
Yes.
then, British Columbia was quite a smaller community for Black people. It was a new environment, thousands of
Yes.
miles away from home, and I started the journey here and transitioned along the way from school, graduated after my undergrad, got to get into the workforce. So did
Yes.
accounting and moved to insurance, and but deep within I had this drive to want get into data. And so
Yes.
about 1.5 year ago, I took the leap and jumped and got into data. And
Yes.
professionally, that's my journey.
Thank you so much, Eddie. And you and I, we talk quite a lot. So I'm a little bit curious because somebody might be watching from other parts of the world. It might be India, Africa, or any part of the world. What can you say has been that driving force? Because you are relatively successful, in your journey. Because for me, I grew up in Zimbabwe. I was, you know, young, and I would see aeroplanes flying past when we were heading Keto, and I could only imagine just getting into, that airplane. But, with time, now I realize when I look back that it is very possible through education to achieve, your dreams because education for me has opened a lot of doors, a lot of opportunity. I still learn every day. So for you, what has been that driving thing that saw you leaving Uganda, leaving your family there, and coming, to Canada? That was, many miles away, thousands of miles away, Eddie.
Yeah, one thing that's a difficult one. There are lots of things, but I think at the back of it for me, I'm just a regular kid from Uganda. So at the back end of that was a drive for I think a better life. I was quite entrepreneurial back then, and you would say I was a go-getter. I
Yeah.
wanted to improve my life. I wanted to get better, secure a financial future for me and a potential family back then. So I engaged in a lot of projects, and one thing led to another. There is no way in my wildest dreams I would have dreamt of being in Canada. That was never the plan. The plan was simple: get through school, secure your funding for university, make sure you are at par financially and good to go with life by the time you finish university. That was
Mm.
the goal. Back then, I did all these different projects, entrepreneur, along with my academics. And by
Mhm.
the time for context, in Uganda, we do A levels. So by the time
Mhm.
I finished my plan was by the time I finished my A levels, I need to have secured funding for my university and life after
Mm-hmm.
that. And that was pretty
Mm-hmm.
much the primary goal. When the time came, yes, I did have my funding from my own personal projects to actually um, push through university, at
Mm-hmm.
least for the initial years. But I was also super privileged that at the time I
Mm-hmm.
ended up getting two scholarships, one by the Ugandan government at the
Mm-hmm.
famous Makerere University in Uganda,
Mm-hmm.
and
Okay.
then two, right after that, there was the scholarship from UBC, the University of British
Yeah.
Columbia in Canada. Given the two options, the better option I chose was the University of British Columbia, and so happy I did. And that's how then I moved here. So it was really a drive and passion to improve my life. There was no plan whatsoever of being here, but I'm so privileged and glad to be here today.
Thank you so much, Eddie. Now, moving on to the issue of, personal finance and investing. You and I, I know we have been actively participating in the stock markets. Primarily, I know I invest in Canadian and US stock exchanges, but to a lesser extent, I do trade occasionally the futures in the global markets, but also in the Zimbabwe Stock Exchange. So I'm just curious, like, what would you say, when did you start investing in the stock market and how has your journey been like up to now?
Yes, caught my journey is that entrepreneurial spirit, and really they need to survive, you know. So finances are like at the top of that list. It's like you gotta get your money in order. Uh,
Yes.
but when I moved here, the primary goal initially was, okay, this is a whole new different country, whole new
Yeah.
culture. You get that cultural shock. You're one of the
Yeah.
few colored people around, a
Yeah.
smaller community, and this whole broad cosmopolitan culture. The initial focus was, hey, let me get to learn this environment and get to build this new community and fit into this big world that I'm in right now. And so the entrepreneur side kind of slowed. And then as I became comfortable with the culture here, became over my cultural shock, I then
Mhm.
began to go back to those roots of, okay, you need to secure the bag, you need to secure the future. And in
Yes.
so doing, reverted to what options I have. And
Mm.
while back in Uganda, I had never thought about the stock market. But in Uganda, I did read books about like the
Mhm.
famous Rich Dad Poor Dad. I read that book while I was in
Yeah.
high school.
I
And you're
did
thinking
too.
about, okay, I want to be an investor. I gotta be an investor at some point. You're talking about, oh, I think one of the bigger prospects was I want to get into real estate, you know. And then now
Yeah.
moving here and then realizing that, hey, I'm in North America now, and I actually have the optionality to get into the market. Not that you need to be here to get into the stock market.
Yeah.
I really jumped in and began doing that homework. And by 2020, I think this was 2020 when COVID hit,
Yes. Yes,
right?
that
And we
was it. Yeah.
remember we had that whole meme stock frenzy on this side, and a
GameStop
lot
saga.
of young folk talking about the market and all that. Following all the books I'd read, it kind of pushed me
Yes.
to the time, and I was home at that time. It pushed me, and I was like, okay, now this is the time to jump in. All the conditions aligned, and I then opened my first account, which was quite an experience, quite surreal. And so since the COVID time in 2020, I've been in the market, and I've it's a journey, and I'm still learning. But it's been a wonderful journey so far.
Great. Great. I like the fact that, you came to Canada, you acclimatized to the environment very quickly. And by the way, you majored in statistics, right?
Yeah, so
Or
I did
if you don't, yeah.
the interdisciplinary program in mainly statistics and economics.
Yes. Okay. So I'm talking to an economist here. So no, that's nice. And so I know when I came here in Zimbabwe, I used to actually just pay things on cash. I didn't know about the credit cards. So when I came here, I remember at the University of British Columbia, there were, the top six Canadian banks, that is Scotiabank, TD, and the other CIBC. They came and they did this show where they were just, asking, students, talking to students about potentially using credit cards. So I was really excited. I think at that point the maximum they could give was like $500, and I was kind of like, "This is free money for me, is it?" But then over years I learned that credit card interest is like about 20%, for some credit cards, but for line of credit, it can be lower as 10%. So over the years, I made some mistakes, but I quickly learned. So what has been your experience, in personal finance? Because my experience talking to some friends, credit cards and debt is one of those things that really, drag people behind because you are paying interest of like 20%. Imagine if you were invested in the market and you are making 20% per year compounded. It means in 5 years your money will have doubled. 10,000 will be 20,000. After the next 5 years, that would be 40,000. That's an exponential growth function. So did you also make those kind of mistakes? What are those, mistakes that financial, personal finance and investing mistakes that you probably made as a new immigrant in Canada?
Yeah, absolutely. So back home, we don't have, at least like in my circle of people that I know, we did not have credit cards. That was not a thing.
Yeah,
It's not a popular thing that banks give you a credit card and you can go off and use that money. Normally, when you talk about credit, it's like somebody got a loan from the bank and they put
yeah,
their land or something as collateral. And so as a young
yeah,
person, you never have access to that.
yeah,
Now,
yeah,
once I moved here, like these people give out credit cards on campus like candy, right?
yeah,
Banks, so they're giving you $500, and I remember
yeah,
Scotiabank gives you, I think, at the time would give you $1,000
yeah,
worth of credit on your credit card. But the funny thing is, when now you have your debit card, which is your checking, and now you all of a sudden have a credit card, and initially, intuitively, it wasn't that simple to reconcile that, hey, this is borrowed
yes,
money. You
yeah,
know, the credit card
20%
is
interest.
actually borrowed money, it's actually a loan. And when they're normally giving you that as a new immigrant or as a student at the time, when you get it, you don't really think much about the interest, right?
Yes.
Until you realize it's about 20%,
Oh my goodness.
23%. Sometimes it actually goes up to about 29, 30%. And that's
Yeah.
huge if you keep that
Yes.
credit. Now, that culture, often a time, if you don't realize and get to check it, then as you build your credit history, banks basically give you more money, more
Yes.
credit. So
Yes.
before you know it, you have about five, eight, 10,000
Yeah.
worth of credit that you could leverage. The unfortunate part
Mhm.
is if you keep leveraging it and you in a non-productive way and
Yeah.
you keep piling up and paying that interest, eventually it becomes pretty much a runaway uh, interest,
Yeah.
and your payments are
Yeah.
more towards the limit, right? Because the
Yes.
bank tells you
Yeah.
this. The bank will be like, hey, this is your balance for this month, and this is your limit you have to pay. And then
A minimum
for some
balance.
people, you end up just paying the limit, right? Except normally the
Yeah.
limit for many cases is simply the interest and not the principal. So should you keep paying that, you simply keep making the money back. I like to think about it this way. You're pretty much
Mhm.
getting money
Yeah.
and throwing it away if you're if
Yeah.
you're if you're using
Yeah.
consumer credit.
Yeah. Thank you so much. I think for me also this is very interesting. Yeah, for context here in Canada, credit history is very important if you want to buy to get into a mortgage, that is, to get a loan to buy a house. In Canada, to my knowledge, even though you can have 25-year amortization, you can even have 15 years. Let's say if you want to pay it off in 15 years. But you get into these 5-year terms and you can either have fixed or variable interest rates. So, which, can, add up. But now the thing is like most of these things they revert back to your credit history. Like do you have a good credit score? So if you have a good credit score, you can potentially save money because now the bank could say, okay, you have a history of paying off, loans, borrowed money on time. So, you are less risky to, lend money. It's a business, right? So it can, have its disadvantages. So the way that I like to use credit cards myself is like I just use in credit card and I pay it off right away. I don't want to ever have a balance that is outstanding to avoid paying, those fees as high as maybe 20%. So now moving on in the stock market, I know you're participating actively in the stock market. What has been your strategies? Like do you want to share? It's not investment advice, it's just sharing, these personal experiences as well.
Yes.
Do you have specific, sectors, that you have been focusing on? What have been, your strategy? Because I know you have been, doing fairly well.
So, and that too has been a journey. I want to talk about the stock market. So, and just a disclaimer there, investing
Yeah.
in the market or any form of investment definitely has risk. And also,
Yes.
uh, this I did not get to learn earlier. It's a very personal
Yeah.
journey. Everybody's at a
Yes.
different stage in their life, um,
Yeah.
and everybody has different aptitude towards risk, and so it's a very personal journey. For me, particularly, predominantly invest in currently my largest position really. I put the money in the S&P 500. That's like my core. And
Hmm.
then for the other
Any
portion
reason
of
for
the
that, Eddie?
Yes. One, there is huge diversification. You pretty much over a long period of time have a guaranteed rate of return proven over time, right? So it's good for my risk tolerance, but also it has a pretty much guaranteed in a way appreciation over a long period of time, which I am a long-term investor, right? So you don't want to gamble your money away, especially early. Like I said, I began in
Mm-hmm.
2020. So this is, I'm still new to this pretty much, right?
Yeah.
So initially, there are some mistakes that I did, but very quickly learning, I began to put more of my portion in the S&P 500, where I have that guaranteed 8,
Hmm.
10% a year over a long period
Yeah.
of time. And since I'm investing for a long time, I don't really need to worry. I just keep
Yeah.
averaging over time on that. And then for the other portion of my portfolio, we have some stocks predominantly in tech that we play with, and some core positions. But
Hmm.
really, the core position is S&P 500, and then the other
Yeah.
positions are simply used to one, hopefully grow over time, but also I leverage that to make more money and put that into the S&P. That's pretty much my simple
Hmm.
strategy. It's not that complicated.
I used, pretty much almost the same strategy. I'm curious though to follow up. You say you leverage. Do you mean like you use margin or you borrow money or you kind of like, use it or to elevate your returns on that?
Yes. By leveraging, I mean leveraging the actual position, right? Not
Okay.
credit, not margin. So I
Okay.
do some trades on
Yeah.
my core positions, and I do these
Mm.
trades only on the core position of a company. So once I have a stock
Yeah.
and that I've been following over time, I've done my
Yeah.
homework. And I've opened a
Yeah.
position in it. Initially, I build up that position to something I'm happy with.
Mm.
And then once I'm happy with that position, I begin to trade a little portion of that position. I would say about
Yeah.
10 to 5% of that position is what I actually
You take
trade. And any
profits.
money I make off of that trade, I recycle back into the S&P 500.
Thank you for sharing. I mean, for background information here, what happens is like the reason for me, I also want to invest my core position in the S&P 500 because these are the top capitalized, publicly listed companies in the US. So you have like 500 of those companies, and I access those companies through buying and exchange traded funds. There are quite a number of them. So what I then do is I just hold them, like what Eddie explained, and then also have individual companies. So that's interesting there because a lot of people, from what I've seen, despite and I don't mean this in a bad way, they think they are very smarter than everyone. It's psychological and behavioral. But when I look at the data again and again, the S&P 500, the data that I have seen, it dates back from 1923, and in 1920, that's when it kind of like became public, and then over the years it has averaged 10%. Some years it goes up, some years it goes down if you include dividends. So for me, inflation in Canada is about 3%, in the US 3.5, but the target is 2%. That means a good real return. And from those individual companies, in my case, I do my homework, thorough research, their finances, their management, and all this stuff, and only get in when they are really, really down, 40, 50% down, when that way the risk is low and the story is not fundamentally changed. So that way, if I get 30% return in the individual companies plus 10%. My average is maybe 17%. And I consistently do that. In some cases, those individual companies, I don't want to have more than 10% in one position. So it's kind of like sometimes you lose. Let's say if it's 5% of the position, it's not going to affect the whole portfolio that much, because if S&P 500 right now it's about, I think, over 15%, you know, on average, you do well. So that's quite interesting. Now, as we kind of like, wrap up, what are the things that you would like to share, with the audience here, to say, ever since you came to Canada and if you have been learning about the market, what are the key things that you have learned about life? Because there was this view that I had, based on what I saw on television, this view, about, not in a bad way, the reality of living life in Canada. How is life here? Just,
Yeah.
in a nutshell.
Um, yeah, so there are a couple of, that's a huge question. There are a couple of facets to that. So, one, for me, there is one, getting your life in order, right?
Yeah,
And aligning your life to your goals and your values, right?
yeah, yeah,
And once hopefully you've identified that along the way, for me personally, one of the things I value is family, and I
yeah,
value uh, finance and getting my personal finances in order, because I believe that
yeah,
helps secure the future for the family, right?
yeah.
And along that journey, there are a couple of things. One, before you even think about, like, for example, getting into the market, there's some things that need to be out of the way. And
Mhm.
this I learned over time and through like reading books. You want to get rid of consumer debt because you don't want to be paying interest, right? And once you're done with your consumer debt, then you move on to the second part. Life here can be volatile. You can lose your job. You can
Anytime.
lose a stream of income. So if
Yeah.
you don't have other streams of income, you're pretty much finished, and you need to be able to pay your day-to-day bills, because bills here hit
Yes.
different. They come at every beginning of the month. You have X number of bills that need to be paid. So if you're fired from your job, for example, or you lose your stream of income, then you may be in trouble. So
Yeah.
hopefully you've gotten your if any consumer debt in order.
Mhm.
Then the next thing for me that I did, and that I practice, is then you want to get some form of a cushion. Some people refer to that as the emergency fund, right?
How
Let me
much? How
say,
big is that?
so for me, it's at least about 5 to 6 months at least of expenses
Interesting.
covered. That's what I'm
Mhm.
comfortable with. And once you have, say, 6 months of your expenses predominantly covered in your savings, then now you can begin thinking about, okay, now I have extra money. What can I do with that? Now there are very many avenues depending on what you're saving for, really, right?
Yeah.
But also for long-term purposes, there is an option of putting your money in the stock market, and this is one option of
Mhm.
investing. And that's now when I began. So just begin the journey of getting into the market. Then you begin chipping away a little bit of money to be put into the market. And for starters, I'll just really just go for the S&P 500 and start learning. And really, you learn by doing. I wouldn't go crazy and go trading or go doing all these crazy strategies right from the word go. I would simply start with the S&P 500, and then as you
Mhm.
learn, as you gain information, then you begin to learn how the market works, to begin allocating money accordingly. Because if, like, for me,
Mhm.
when I started, to be fair, I did lose some money during that
Oh
meme
yes.
frenzy. Like
You
most people,
play
you
tuition.
realize I put some money in biotech companies, and that's kind of common story.
Yeah.
You get banned, and I wouldn't. If I were looking back, I wouldn't do that. I'll just start with the S&P, and then begin to, as I
Consistency.
learn, begin to open positions and learn about allocation, learn about how the market works, and improve as I go. So that's kind of, in that regard, that's
Mhm.
kind of the journey that I'll take.
Eddie. I'm very, impressed that you have really learned all these life lessons pretty fast because I like having an emergency fund. And for me, the key thing now is now after, for me, I'm a bit conservative. I like to have 1 or 2 years worth of, cash to take care of the living expenses. I think mostly also because now when you have a child and stuff, you come to, think of the security of the family. But it also then allows me to think long term to say, you know what, if the market drops, 40, 50% right now and I have cash, it's a wonderful opportunity to get in, you know, only on securities that I understand. But in conclusion, there's something that I have learned over time. There's, what is called the, portfolio theory. And a lot of people, what they do is they, depending on their age, because personal finance is, it's personal, like the name, and investing as well. They go all in equities, but the market, as I've seen historically, it goes, like in phases. Sometimes, equities are going up, sometimes it drops, and then bonds and gold and other securities, they do well. So I like to have my portfolio hedged at all times. So that way, I know, like, even if the market drops 40, 50%, the other non-correlated securities like gold, or maybe, I like to buy, the volatility index, the ETFs that track the volatility index called the VIX. So I just, buy those. And I've seen over years that as the market, the S&P 500 drops, the equities market, it becomes volatile, people panic, and it's the same cycle again and again.
Yeah.
So sometimes I can potentially even cash out money. The market is dropping, I'm cashing out and I'm buying you know, uh, the discounted, equities, securities, and I repeat the process, right? But another thing is I've also realized that nobody can really predict the direction of the stock market in the short term, because there are a lot of unknown variables. You wake up, there's geopolitical tension and stuff. So to avoid, that temptation, I try to consistently dollar cost average, you know. So that's something that I've learned. But in conclusion, what is it that you want to share with the audience before you go? We, wrap this up. It's been a
Yeah,
pleasure
I
for sure.
think one, enjoy life. Life is short.
Yes, definitely.
But in so doing, then what I've really appreciated about one moving here, but also now beginning to build a family as a young family, you definitely want to be more proactive and engage in securing your financial future, whatever that route is.
Yeah,
Nobody's coming to save anybody. At
yeah,
the end of the day, I like this like quote I found somewhere. At the end of the day, we are on our own. You are on your own. It's important to
yeah.
proactively take measures to secure your financial future and to think about your goals all the way till retirement, at least for you, your family, and then any other
Yeah,
things can come beyond
yeah.
that. And also then along the way as to do these things, if you're involved in your finances, you perhaps build a community. We
Yes.
at Isaac are a community pretty much, and you begin to
Yeah.
build this network and community of people that are
Mm-hmm.
like-minded and that share very productive ideas. Like these conversations should be common in anybody's life. Like because often the time we can talk about music, talk about football,
Yeah.
talk
Yeah.
about soccer. We have
Yeah.
a all these things, but within the community we engage with, one of the conversations that is rare when we go out is money
Mm-hmm.
and finances. So to
Yeah.
make this a day-to-day thing that we can hang out, we can go out, we can chat and talk about finances, talk about the stock market, talk about different avenues of investing and securing our future, I think is a beautiful thing. And I would encourage everybody to
Yeah.
really think about that aspect of their lives.
Yeah, thank you so much, Eddie. So in conclusion, so a lot of friends, they come to me and they ask me about, where do I invest, money and stuff. I'm not a financial advisor, but I realize that, over the years I'm learning and I've learned quite a few things. So that's why I wrote this book, The Intelligent Millennial
Absolutely.
Investor. So, I realized like I can't talk to a million people at the same time. So one way is, I summarize my thoughts in the book. I'm writing another book and, people can learn that way. But at the end of the day, I think it's very important to, balance, living in the present moment and also think long term, because there shall come a time when, we won't be able to physically work, because of maybe age, advanced age, or whatever reason. So it's been a pleasure talking to you, Mr. Ematam. I am very privileged to know you. Thank you so much for your time.
Been a pleasure. It's been a privilege, and thank you so much for the time again.
All right. And I also have my, YouTube channel, Streetwise Economics, if you want to check out some of the videos and, the insights that I share on personal finance and investing. So thank you so much.